Welcome to Warren Stewart's review of the autumn statement just presented by the Chancellor for 2013. Today we're going to have a little debate and discussion about our initial reaction and response to the autumn statement, particularly focused on how it impacts on our clients and what they need to be thinking about. Okay then, the first change was to do with personal allowances. I don't think it's really a change, it's just a confirmation of what everybody's been expecting. And we've got £10,000 worth of allowances now. Good news, bad news?
Well, this obviously goes both ways. It's good for lower rate taxpayers. They get a larger tax-free allowance. If they're taking a salary through a small company, they can get a larger amount tax-free there and plan the rest on their dividends and things. But as we were saying, the higher rate threshold is now decreasing in the same sort of level as the personal allowance increases, so more people are going to be in higher rate tax, which is obviously where they're trying to get their money.
Most budgets always seem to be about robbing Peter to pay Paul, I think.
So yes, I think with regards to remuneration planning, people taking money from their company, we've still got to be mindful of the national insurance limits. There was no announcement as far as national insurance is concerned, so it's just something for us to keep an eye on. But yes, I think certainly of benefit to some and not as much benefit to some who think they maybe have got some benefit from it. But it's moving in the right direction. I think the Liberal Democrats part of the coalition was very much about getting a personal allowance of £10,000. They are there now, so we'll see where it goes from there. And obviously for us it's to keep an eye on how many more people have now been brought into the higher rate tax bracket. So we shall see. I think that's...
And recognising marriage in the tax system. Now this is about being able to transfer some of your allowances. Do you want to explain it, Mary?
Yes. If you are high rate taxpayers, you can transfer £1,000 of your personal allowance to your partner.
Is that basic rate taxpayers?
Only basic rate taxpayers can do that. So it's not really going to benefit high rate taxpayers. But
£1,000 at 20% is £200, which doesn't sound too exciting.
No, it doesn't.
And I don't know how many people are going to be able to actually do all the paperwork. I don't know how it's going to work from a coding perspective. It sounds like a lot of admin to me.
It certainly does. You know, the £200, the actual money in your pocket, if you like, that's traditionally where the married person's allowance was pitched at, around £240–200. So it's not a great change there. It's just going to be better for those in the lower rates of tax. Certainly those with one spouse on £9,000 or £8,000 or £9,000 and another on 10, 15, 20,000. Those guys are going to benefit from it, but how they administer it, we'll have to wait and see, whether it's through the PAYE system, the RTI system, whether it's through having to file a tax return or a tax election. Lots of different ways it could be done, but it'll be interesting to see how they make it as painless as possible. Not always something we associate with the revenue and the admin machine that is the revenue, but we have to see. My concern would be that it's all going to be based online, which is again another reason for everyone to be getting online. It seems to be that's where they want everyone to be. There are going to be people who won't be able to do that. So it'll be interesting to see what they're going to do about it. It's going to be of some value to some people, perhaps not as many as it would like to, but we shall see.
I think you're right, but I'm not overly excited. I don't think I'll be able to sell this to many of my clients. Abolition of national insurance for under 21s. Now this seems like a job incentive, as the Chancellor would put it.
Yes.
What do you think about this, Stuart?
Yeah, well, it obviously is an incentive for people to employ younger people, so and that'll in turn help them and help unemployment of younger people, which is something that the government keeps saying that they want to do. It was limited to the lower rate taxpayers, so it's not going to help everyone, but it will help the people that it's aimed at, the people who have no income at the moment and are on job seekers, and they in turn might get a business will come in and take them because they don't have to pay the national insurance if they're under 21.
I think for me this is another sign that they're trying to get people back to work. We've got at the moment the £2,000 employers allowance, which is coming in this year, which is a great thing, and then there's also this to try and encourage under 21s into work. You know, I think they're very much focusing on getting people to work, to contribute to the tax system. I can only applaud on this one. I do think it's a great way forward. Get everyone working, get them into jobs, get them a bit of value for themselves, a bit political. But you know, having only just got over 21 myself, I'm a bit disappointed. But you know, we shall see where that one goes. But I think it's a real good push to get people working. I think that's what it's all about.
I think if you were the finance director of McDonald's, you'll be very pleased at this point in time. If national insurance is going. A windfall, maybe. For me, the biggest change was to do with capital gains tax in this budget. I think there were two really big changes. The first one being capital gains tax, non-residents and UK residential property. You have a few clients in this area, Stuart.
I do, yes. Well, the change is going to be that non-UK resident individuals who own UK residential property, they're going to have to pay capital gains tax when they dispose of that property now, starting from April 2015. So they haven't actually said how they're going to do this yet. There's going to be a consultation at the start of 2014. But it will be interesting to watch this space and see if they're going to be doing any rebasing election for the value up until April 15, or is it going to be just the cost that you pay for it that you'll get a deduction for, which it depends on the situation, but some people will have had the property for several years and they may have a large gain and it was never their intention to be just getting rid of it, but now they might have to before April 2015. So we'll have to see.
More properties on the market?
Could well be. Again, we have to see what they say and how they go about it, but certainly some people will be trying to plan at this point now and trying to get rid before this comes in. So it might see a large amount, especially in London.
One debate that has already started within the office, us tax nerds, is how it's going to work. I think that's going to be the interesting point.
Yeah.
Is there going to be a withholding tax at source? You know, sometimes it's more difficult to track down someone with a Bermudan company who owns a rather large mansion in Fulham. How are they going to operate it? That's one of the things that we're going to be interesting to see. And whether that tax is going to be relievable in the country of residence. You know, we've got people here from Russia and China and wherever and all over the world coming to London at the moment to buy property. Will their tax they're paying in the UK, how does that work with their own tax system? Lots of cross-border issues for us to get our teeth into, quite interesting stuff. And, you know, is there going to be yet another tax return to file for whoever owns the property to go with their stamp duty, land tax forms and all the other forms that seem to be having to be filed. So interesting, a big change.
I don't think any votes will be lost on this though.
No, you're quite right.
Or not many.
No, but you know, you mentioned it before, will it bring more property to the market? The types of property they're talking about, I'm not sure that there's that much demand for them. Particularly, I think someone mentioned on the commentary already the oligarch tax. I think that was one of the BBC commentators. That may or may not be the case, but I'm not sure. There's still quite a lot of funds coming from overseas to buy buy-to-let properties, to move their funds from the country of origin. So it'll be interesting to see whether there's any limits. We've already got the £2 million, properties over £2 million where this is affecting. Will that be the same? Will it be a capital gains tax on everything? Or will there be a minimum amount? So it'll be quite interesting to see that as well.
I think some people will be surprised, especially people who have emigrated away from the UK for a number of years and they've let their home or their part of their asset in the UK to keep their foothold. I think there'll be some people surprisedly are going to be surprised by this. I think this will come and haunt some people. The other thing, which is a major change for me, well, not for me personally, but for my professional career, is the change in the private residence relief, the final period rule. Would you explain that for me, Mary?
Yes. One of the really beneficial reliefs is the principal private residence relief, which is for a house which you live in, and you can still get some relief even if you don't live in it for the whole time that you own it. Currently, you get 3 years at the end of your period of ownership, 3 years relief, but they're going to change that to 1.5 years, probably to well, they're worried that people are trying to get away with it. You know,
taking advantage, we like to say. No one gets away with anything. We just encourage people to take advantage.
Now, this is obviously a measure that's going to put some more houses on the market and sort of break the buy-to-let circle where people have got a real incentive to own a property instead of where they can afford it, is to actually rent that property out, take some final period exemptions. Shortening that might put more properties on the market. They are obviously thinking about the market, the property market.
It's certainly, I just think because CGT, Principal Private Residence or Main Residence Relief, as Mary said, is a valuable relief. It still is. And it's being taken advantage of. There are people who are living in the house for 6 months and then selling it after 4 years because they technically lived in it for the whole period, you know, barring 6 months, and then they're claiming all their exemptions and reliefs and ending up not paying any capital gains tax. In the market, 4-year period is quite a long period, particularly if you buy at the right time, and it could free up some stock depending on how long people have lived in it or what the timing is like. It's come a bit out of left field for me. I wasn't expecting anything on CGT or Principal Private Residence Relief particularly. It just seems to be something they've thought of. There's a few cases going through at the moment that we're aware of. A few wins, a few losses for the revenue. Maybe this is another way of getting to that, making everyone realise that they know it's there.
I think you're absolutely right. There's been some cases there about establishing residency. I think this will be another tool to actually collect more tax.
Yep.
Definitely. I think the capital gains tax changes in this budget, we wasn't expecting much, are quite fundamental.
Yes.
So very interesting stuff. Moving on to the next general topic, I think, is tackling tax avoidance and evasion. Now, the Chancellor's obviously sees this as a key area that they want to get involved with, particularly partnerships with mixed memberships where you have corporate members as a member of a partnership. I think there's been various schemes that other accountants have been promoting as a way to save tax, and I think this is unfortunate for those who are going to be caught up with this. I think the revenue are going to pick these reliefs and plans apart now.
Yes, definitely. There were two main parts of it. One where they were suggesting that salaried partners are actually employees of the partnership,
Yeah.
and the other was to do with who were the partners or who were the members of an LLP or the partners. Were they individuals or were they the individuals' companies? Comes back to IR35 and similar provisions. It's interesting. It's going to be quite a few people are going to be affected by it because people were how they were structuring their remuneration between their company and then taking some as an individual. Lots of national insurance saved, lots of tax saved. We'll have to see what the actual legislation says and what we can now do about it with clients who are affected directly by it.
I believe it's with effect today as well.
Okay, so
I think it's coming straight away. I think the legislation has been printed and published. I think it takes effect from today. So there should be some nervous accountants out there, I suspect.
Well, certainly. There you go.
Not us. Dual contracts. I think this is a little bit specialist, but I think a few people will be affected this, especially in the city, where they might be working in different countries and non-UK domiciles. So I think a few people are going to be caught out by dual contracts changes.
Yes. Again, following on from the statutory residence provisions, the new rules for how people are deemed to be resident or not resident, the end of ordinary residence, which was something that these dual contracts were, some of them were hinged on and used as an advantage. It slipped a little bit under the radar. I don't recall the Chancellor mentioning dual contracts, but it certainly slipped into the press releases. So
it's certainly on the website.
Yes, certainly. So yes, bankers with or anyone really who works in different countries and has split their employment between two different countries and treating their employment as taking place in one country and then some in another. It'll be interesting to see see what it's all about. To be honest, I think that's the end of that, and let's see what someone comes up with in its place.
I think that's the end of our review of the Autumn Statement 2013. I think it was a balanced, neutral budget. I think he was talking about, but from a tax practitioner's perspective, I think there was a few things in there. And I'll certainly remember the capital gains tax changes.
Definitely, I think there was lots of. It was a lot very positive about the economy and keeping going on the right track, but the tax things very interesting. Lots for us to review and keep everyone updated on. To be honest, that's the next step.
I think finally we should say thank you to everyone. I was Damien Talbot.
I'm Mary Gobu.
And Stuart Barber.
And Ryan Lane.
Thank you and goodbye.